trading at its best.
Okay, once again, welcome to the Forex Weekly webinar. I am Mike Swanson, for those of you that are first-timers watching these trainings. And I've been trading the markets for about 10 years. So I've got a lot of good things I can teach you. If you have any questions at any time, you can feed them through and we'll get those answered in the Q&A. Today, I'm going to be teaching you guys about the proper use of multiple time frames and really just giving you a lesson about time frames in general. So I'm going to be teaching you the difference between daily, hourly, and minute bars, and then I'll get into why or what time frame you should use. So a lot of people in one of our past webinars were asking if I'm doing this pending order strategy or some other strategy there, it's like, what time frame should I be trading on? It's a big question. It sounds so simple, but I'm going to give you some tips that you can take away that'll help you to decide that. Okay, and then we will get into the Q&A. So let's go ahead and talk about, well, first before we do that, let's talk about the difference between daily, hourly, and minute bars, and then we'll get into what time frame you should use, okay? So what I'm going to do here, I'm going to bring up a platform, and this is a trading platform called Dukascopy, or Dukascopy's Forex platform. And the reason I'm showing you this is they have the ability to customize your time frames. And the only reason I'm showing you this is to kind of demonstrate how time frames are created. This will be a pretty basic concept, but I will get into some things, like I say, that'll help you decide which time frames you should be using for your strategy. Okay, so just stick with me here. You've got in Dukascopy, you've got this drop down where you can see they've got a lot of default options. You can have a tick chart, you can have a minute chart, and you can get into these point and figure and Renkos. They have different chart types. But for what I'm going to be showing you today, we're just going to focus on minute charts. Okay? And most of them you see, it's just the typical 1 minute, 5 minute, 10 and 15, 30, all the way up to the daily and monthly. Okay? Now, the basics here is simply when you're looking at say a bar chart or even a candle chart, either way, basically one of these candles, one of these bars represents that period that you're on. If you're on a 5 minute, it represents 5 minutes of tick movement, of price movement. Let's see if we can get this to load here. Let's go back down to the minute. Okay, so I'm on the 1 minute. Basically, each one of these candlesticks or these bars represents 1 minute of price movement. Okay, it opens here and closes here, depending on the color, properties, and settings you have. That's the ultra basics of what's happening here. Now, what some people don't understand is that when you switch time frames, if you go from a 1 minute to an hour, you're still looking at the same price, the same instrument, the same price. Nothing has changed except for now it takes longer for it to form one of these bars. That's the only difference. There's not something special that happens that says now that you're on an hourly time frame that that the charts are going to be easier to read, or that you're more likely to to have a better trading setup or a better trading system based on that time frame. You can have a system on a 1 minute that does just as well as a system on an hourly or a daily. Okay, and I'll help you determine what time frame you should be trading on, but you need to understand those basics. That it doesn't matter if you're on a 1 minute or an hourly. You're going to see the candlesticks will look very similar. And in fact, it's been about a year now, but I did a poll, I did a study with a group of traders to find out if they could detect, without knowing what time frame I was on. I gave them a side-by-side comparison. I said, can you tell me which time frame I'm this one here on the left and this one on the right? Which time frame? Which one is this? Which one's the hourly? Which one's the 1 minute? And so, you know what happened? It came out almost 50-50. Nobody could figure it out just by looking at it without knowing what time frame it was on. So what that led me to believe is that led me to explain it to people here in teaching is that it doesn't matter what time frame you're on. You can interpret it the same way as any other trader. A trader could be on the daily and a trader could be on the minute, and they could be interpreting what they see the same. Okay? So stick with me. I know that it's getting it might seem a little confusing, but I mean, I could do some examples. I mean, if you look at this hourly, okay, look at this hour. Now, obviously, they're not going to look the same, like identically, but the price movements, the flow of the market, these big streaks, these runs, these breakouts, these consolidations, all of that stuff is on both charts. You'll see it here on the hourly. You'll see it on the 1 minute. Doesn't it look the same? You've got your trend, your pullback, your whipsaws, your consolidations. It's all the same. So you're probably thinking, okay, if it's all the same, then what should I do? What time frame should I be on? Well, we're going to get into that in just a moment. Let me just, like I said, there's a reason I brought up Dukascopy's platform. Let me just show you to kind of help this sink in about these different time frames. They're not something special about them, because take a look at this. If I go into Tools, Preferences, Period, I can actually build a custom time frame. So I can say I want to go in units of a minute or in seconds even, and ticks if I just want price ticks to make it up. So let's just say I want to have a chart in minutes. I could put a 2-minute chart on here. Okay? Or let's say I want a chart in 30-second increments. You'll see how this will help you understand that these charts, they're not generated by a broker. They're not the one determining it. It's all just by the amount of time on the price has been moving, and it records that the open, the high, low, and the close. Okay, so watch what happens now. I flip that over to my 30-second chart. Let's see, there it goes. And you'll see it's the same type of look. It's just a different length of time that we're looking at. Now, I also created that 2-minute chart. Here's the 2-minute chart. Do you see how they all look very similar? There's not something special about a daily. You can jump up here to your daily. And, you got a bigger trend here. And this is something I will point out. The reason some people say, okay, I'm going to stick with daily trading or charts, I'm going to trade off the daily charts, is because of it eliminates some of the noise in the market. Okay, if you are on a 1-minute chart, you're obviously going to have more frequent consolidation periods. Okay, you're not going to, you're going to have periods where it trends really well, but you're going to have much more noise. So we could say much more of those, those consolidations. And that's the reason some people will jump up to dailies and just stick with those, because some pairs will give you those long drawn out trends. And of course, like I say, you'll get consolidations. It just won't be as noisy as those lower time frames. Okay, but let me tell you this. Let me answer the question now on what time frame you should use. Okay, I've kind of explained how time frames actually work and the different period settings. So let's help you figure out what time frame you should be trading on. So let's go back to that chart. Okay, the simple answer to this question is going to be, ask yourself how much time you want to take out of your day trading. How much time can you watch charts? How much time can you check in on your trading in your charts? That's really the most important question I've found. After doing that study a year ago with a group of my traders, I've determined that a lot of people, they have a lot of time to trade, and that's why they find themselves glued to their charts. They have nothing else to do, or they enjoy looking for opportunities to take trades. If that's you and you have plenty of time, you have 4 or 5 hours or more that you want to sit and watch your charts, and look for setups, and study the markets, then you're gonna probably find yourself sticking with the 15-minute charts and even down to the 1-minute, 5-minute. Okay. Now this doesn't mean you don't look at the daily chart at all. Okay. Now you might have a strategy that says stick with the major trend, and that's when you'll jump up to your daily still, and you'll say, okay, we're in a major uptrend, we're above this moving average. I'm going to stick with buy trades only, long positions only. So if you're down here trading your 5-minute, you would just say, okay, I don't care if it's going down or how fast it's going down, I'm only going to buy. Okay, so like I say, you can still cross over to multiple time frames. You can jump up to the daily even if you're day trading. But you'll find yourself executing entries and positions on the 15-minute, 5-minute time frame, even down to the 1-minute. And that also means you would want to stick with lower stop losses and targets. If you're just going to be in for a few hours and you're going to want to be a day trader, you're just going to look, most of the time you're going to find yourself putting in a trade with no more than maybe a 50 pip stop. And most trades won't even be that. You might find yourself being more of a scalper, taking 5 to 10 pips on the 1 minute and 5 minute charts. Okay, so that's for those that want to watch charts though. For me, I did that for several years, and I made some good money doing it, but I just didn't like that lifestyle. I eventually I got tired of all I did was stare at charts. So for me, I moved away from that, and I went to the daily charts. Now that doesn't mean I'm making less money or I have less opportunity. It just means I have a different trading plan, and I can make just as much money on my daily charts, and it allows me to spend less time staring at my charts. Okay, but you can decide on that. But that's the question you need to ask yourself. If you have a full-time job and you get home from work and you're just drained from your job and you don't have a lot of time, you don't want to go stare at charts, you should not be on those lower time frames. You should be on the 4-hour, the daily, even the weekly. And the big myth, like I mentioned, is that people think you don't make as much money being those traders on those higher time frames. Okay, that's for another day. That's another lesson where you can learn about risk to reward ratio and win rates. But hopefully this helps you make that call and determine what time frame you should be on. There's nothing special, like I say, about, hey, trade the hourlies because the best setups are there. That's not been proven by anybody. Maybe a specific strategy has been optimized and improved for a specific time frame, but that's different. That's gets into back testing and studying charts and things. But if you're trying to build your own strategy, or you've got an option to say, I've got a strategy that works on any of these time frames, which one do I pick? This should help you determine that.